What's going on? Blake here. As always, none of this is financial advice. Trade and invest at your own risk. We are going to help you get prepared for this week's trading. And this video is likely going to be short because not much has changed since last week. Very simple. We're in a downtrend. Things don't look great. We have the S&P and the NASDAQ both trading below their 250-day moving averages. We've had a death cross, quote unquote, on the NASDAQ a couple weeks ago. And on the S&P, it looks like it is an impending death cross. So you can see this, the top of this cloud is the 50-day moving average. And I'll just highlight that here with this line. So you can see the 50 is getting ready to cross through this 200. And you guys know, if you've been around in the markets for a while, that is not a bullish signal. And the NASDAQ had its death cross back here really at the beginning of, March. And since then, it hasn't done too well either. So, like I said, not too much has changed since last week. We are still in a major downtrend. There's a lot of geopolitical risk. I do expect prices to continue lower simply because, the higher time frames like we've talked about and price structure. So it has nothing to do with what I think about the news or what's going on in the world. It has everything to do with price structure. And the reason that is because everything, all data, all known, all unknown, all speculation, all risk is reflected in price. So it's very simple to block out the noise and to focus on price and price structure and let the market tell you, what its likely next move is. So this has been, very difficult to swing trade. And as you guys know, when we break trend, our priority is preservation of capital. So we're going to sit this out. We had a quick little 3-day uptrend that you could have got paid here. Technically, this lasted a little bit longer because we never broke below the 10. But a nice little 3-day pop that if you were able to get in, you could have scaled. And then just to roll back over and then act like we want to, bull flag above the 10 again just to fail again. So it's been difficult tape for both bulls and bears on both sides. Yes, there's intraday volatility. If you're aggressive and have a lot of experience day trading, that would be the only thing I'd be doing right now. Very difficult to hold positions overnight, long or short, even though we're in a downtrend, because these rips higher can, really blow you out of some positions if you're short. And if you're long, if you're getting long up here, then you just, stops you out of your positions as well. So it's difficult both sides of the tape. And I've mentioned things are not going to get easier until we can get above this cloud, until we can get back above the cloud like we did here, like we did back here, like we did here, and you can go on back here. This is our methodology. When we have trend and momentum towards the upside, that's when we get paid. When we have trend and momentum to the downside, that's when we preserve capital. So that's what I've been doing. Hopefully that's what you've been doing. We have had some very selective, trades. Obviously, if you guys, are looking at the playbook, you'll notice many of our trading setups are, well, almost all of them, if not all of them, are in relative strength. So some of our previous plays have been, a lot of them has been in energy, as you guys know. So XLE, this has been still paying us, right? This is still a phenomenal trade. Hasn't even come close to touching the 10 SMA. I guess it kind of almost touched it here on the 9th. But this is very strong. This is a strong pullback. Can we rip higher? Absolutely. But this has been a strong move. If you were able to get in, back on, February 28th when this triggered, you've had plenty of time to scale and get paid. Some of our other plays, XOM, had a few day pop, still back above the trigger price. CVX has just been phenomenal. CVX, this thing looks like it wants to continue to go. CVX paid phenomenally. Lockheed Martin had a few days of a pop, had a bull flag breakout. The next day we took it. Could have got paid very nicely. You can see people are taking some profits now. Also gold. Yeah, obviously, we've been pretty bullish on gold for quite some time. And we had entries back here, here, and here. And if you didn't take any one of those three, it's difficult to be getting in now because this has, been in a sustained uptrend since really the beginning part of February. So this is a gold trade that we've been, very focused on, not only in our trading account, but also in the investment account. And so, yeah, we've absolutely crushed gold. We've crushed energy. And if you're being patient, you've crushed sitting in cash on the sidelines, waiting for the next uptrend, waiting for price strength confirmation. We've got a lot of laggards in this space. Even the big guys like your Amazons and your Apples and your Teslas, Nvidias, they don't look great either. So keep an open mind. Now, Bitcoin, I did it. I'm kind of surprised, to be honest with you. I'm surprised this hasn't rolled over yet. Hasn't done much. You can see this 45,000 level seems to be a really important level. We've tested it multiple times, have not been able to get above it. We had this 1 day pop here on the 8th, just on the next day, the 9th, to just reverse. So just negated all of this bullish price action here. And again, we're still below the cloud. We're below the 10 and the 50 on Bitcoin. Ethereum, very similar story. Below the 10 and the 50, slightly weaker than Bitcoin right here. So keep a close eye on crypto. Still in a bear market. It's down significantly from the highs. How much longer can this last? Nobody knows. But right now, the price structure isn't really bullish until we can get back above the cloud, just like we've talked about with the S&P and the NASDAQ as well. NASDAQ, we didn't talk about that yet, but NASDAQ is a little bit weaker. Let me remove some of these. So NASDAQ is a little bit weaker. So tech, if you're looking to short, I'd be looking at tech or, maybe even small caps, but a little bit easier to trade the mega momentum names. And when you can identify a trend, and the trend right now is down, you can see some of these names like Apple and Amazon, Facebook, these ARK funds are just getting blown up. So even though the market is 20% down from its highs, last week was the week before OPEX. So are these lows the pivotal lows? Because oftentimes we do see pivotal lows the week of OPEX. The week before OPEX going into OPEX. So last week was the week before OPEX. This week is OPEX. And so are these the pivotal lows? We'll have to wait and see. The odds are probably the answer is no. But you guys know I don't make predictions. I follow price structure and I follow momentum. And from there, I can identify what are the trading probabilities. Are the odds in our favor or are they not in our favor? And right now, the odds are not in our favor for swing longs. So we had our line in the sand for investments on the NASDAQ at this pivotal low, 350 essentially. So we have been out of tech really since we broke below this. So if you're following the investment portfolio, we don't have anything allocated to technology because it broke our line in the sand. Well, the line in the sand on the S&P was just broken on Friday. So we are going to have to really play this close to the chest and play defense. Maybe we will have a look at getting some more gold exposure. It's just difficult to add up here, but if we take a look at the higher time frames like the monthly, we've been talking about this massive cup and handle, and above this 186, I would say above 186, I think it's a very strong probability that this erupts higher. So if you're taking that approach, then I think gold is still a great buy and still has a lot of upside. But we do definitely have to keep a close eye on the S&P and the NASDAQ because, well, now we're going into a downtrend on the monthly time frame, and that's obviously something that we don't want to see. So on the monthly time frame, we're in a downtrend. That's not great news if you're an investor. So, yeah, things don't look great and definitely need to be playing defense and being very, very conservative and cautious with your trading capital. So heading into this week, once again, guys, I'm not going to be doing too much. We got paid with energy and we got paid with gold. And I'm not willing to press my luck trying to be aggressive, trying to trade this market when this is really difficult and choppy to trade. So forewarning you guys this week once again, until we can start see prices closing in just even inside the cloud, just in this range, then I would start to be a little more aggressive. And if we could break above the May 3rd high on the S&P, which is, we'll call it 441 roughly, above 441 on SPY, yeah, I think that's a pretty high odds trade that we do break above this cloud. And then if we bull flag, then we can talk about a move higher. But until then, right, we can't even think about getting long until, number one, we close inside the cloud. Can't think about adding long until, number two, we confirm price strength above this March 3rd high. And then number three, can't think about really getting size on in a swing long position until we're above the 50-day and the 10 and essentially above this cloud. So that's how I'm playing this market, being very cautious, protecting capital, having patience, some of the most important things that go overlooked when becoming consistent at trading. That's all I got for you guys this week. I'll see you on Monday.